Good morning, everybody. We have a mixed to higher trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. May corn futures up 13 and three quarters at 578. December corn is up 15 cents at 492 and a half. May soybeans up 5.5 at 1442 and a quarter. November soybeans are up 23.5 cents at 1279 and three quarters. We've got May Chicago wheat up 2 and 3 quarters at 615 and three quarters. May Kansas City wheat, I'm sorry, down 2 and 3 quarters in the May Chicago wheat, down 3 and 3 quarters in the May Kansas City wheat at 572, and down 1 and 3 quarters in the May spring wheat at 609. If you guys are listening on the podcast, really appreciate it. Leave me a review if you have not already. If you're watching on YouTube, make sure you subscribe to the channel if you haven't already. Make sure you hit that like button. It would really help me out to grow this channel. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I offer a subscription service which includes a whole bunch of stuff. I've got a morning newsletter that goes out every business day at 6:30 a.m. Central Time. Every overnight headline you need to be aware of, all sorts of interesting charts and graphics, all of my grain marketing recommendations. There's a text message service that includes twice daily market updates plus any important breaking news. My subscribers had the USDA numbers, I think, 60 seconds after the report yesterday, and then had a subscriber-only video sent, I think, within 20 minutes. And the video that I sent right after the report here essentially explained what happened, essentially kind of explained my thoughts regarding grain marketing following the report. And again, this is a subscriber-only video. It's a new service that I've added here to the subscription deal, which has been very, very popular. So let's get into what happened yesterday. We were obviously surprised. USDA kind of threw us a curveball here with these acreage numbers. Corn acreage lower than expected, soybean acreage lower than expected. Those are the numbers that were responsible for yesterday's big rally and the follow-through buying into this morning. The bottom line is that farmer reported intentions did not support principal crop totals as high as 2016 to 2018. That's what USDA said on their Twitter account, the National Ag Statistics Service Twitter account. Corn acreage was more than 2 million below expectations, but only slightly above last year. Soybean acreage was 2.4 million below expectations, still up sharply versus last year. So when you look at like overall principal crop acres, and this is the issue that the trade has, is that most people thought that principal crop acres this year would be back up to like 2017, 2018 type levels. We had big prevent plant each of the last 2 years, which resulted in lower acreage. But the expectation this year was that we'd be back to that like 2018 benchmark. And versus 2018, principal crop acres are still like 3 million light. So that's kind of the argument here. Where did these acres go? And USDA is essentially telling us, you know, the surveys just didn't suggest to us that we're back at those sort of levels. This has happened before. We've seen light intentions in the past, and then ultimately USDA may find these acres at some point down the road. And I think that the market's job here for the moment is probably to make sure that those additional acres get bought. I think that's what's happening in new crop corn and in new crop soybeans. I think that the market is trying to assure that these additional acres are bought and planted, and that we end up with a more comfortable supply-demand situation. When you break it down by crop here, we're seeing quite a bit of loss of corn acreage, as a matter of fact, in your big like corn growing, corn belt states. This is planted corn area, or what's expected at least. And you can see here, the corn belt, all the way from Ohio, Indiana, Illinois, Iowa, Missouri into Nebraska, reducing corn acreage by anywhere from 1 to 4%. Big increase in corn acreage in North Dakota, South Dakota. So you're actually losing corn acreage in a lot of areas. And of course, that means that you're gaining soybean acreage in a lot of areas. Here's the soybean map. And, it's kind of like the opposite. In the Dakotas, you're gaining acreage of both crops, but in the Corn Belt, you're gaining acreage of soybeans across the board. Spring wheat acreage is going to be down versus last year. You're going to be back down to like those levels from, I think, 2016 or something like that. You're going to lose acreage in almost all your major states except for Idaho and Washington, I suppose. So the report's certainly a curveball, and as I had probably mentioned on here before, this is a report that just about everybody misses every year. Nobody ever nails the acreage numbers. If they said they did, they're probably lying about it. There was another piece of this report, and that was the grain stocks numbers. The grain stocks were mostly in line with expectations, and in my opinion, were not responsible whatsoever for the rally yesterday. Corn stocks were above or below the average trade guess by just 66 million bushels, which is not hugely consequential. Soybean stocks were above the average trade guess by 21 million. Wheat stocks were above the average trade guess by 36 million. I mean, those are some slight variations from pre-report expectations, but not big surprises there by any means. On some non-USDA report related notes here, ethanol and gasoline appear to be improving. Weekly ethanol production was only down 3.5% versus the same week in 2019, which was our last pre-COVID benchmark year. Gasoline demand was only down 2.6% from the same week in 2019. Again, I can't really use 2020 as a good comparison anymore because it was at this time last year that ethanol production and gasoline demand just totally fell out of bed. So you've got to go back to 2019 or 2018 for comparison. Ethanol production margins are mostly positive. Ethanol stocks are at their lowest level seasonally since 2015. So low stocks, and we've now got better looking production margins. We could see some better ethanol production here, although this big rally in the corn market may change this a little bit. Corn and soybeans will trade with expanded limits today because we had limit up price moves yesterday. The daily limit in corn is 40 cents. The daily limit in soybeans is $1.05. USDA will release its weekly export sales report this morning at 7:30 a.m. Central Time. Old crop numbers, corn sales expected 600,000 up to 1.2, soybeans 100 up to 450, wheat 125 up to 450. In the outside markets here this morning, we've got the stock market just a little bit higher. The Dow's up about 20 points. The S&P's up 12. Gold and silver down a little bit. The U.S. dollar's down a little bit. Crude oil is up 27 cents in the May WTI at 59.43. The bonds are up almost a full handle. Everybody have a great weekend. I'm going to be out a little bit early today. I will talk to you on Monday.